Welcome back to the Dividend Diplomats YouTube channel, everyone. You got your boys here, Lanny and Bert, the Dividend Diplomats. What are we talking about today, Lanny? We're talking about two REITs that are battling head to head. Whenever I mention one on this channel, I immediately get blasted by all of you commenters saying, why aren't you looking at this one? So you know what we're doing? We're putting them head to head today, everybody. So let's buckle up for a dividend stock showdown right now.
Guys, smash that subscribe button. Give Bert and I a nice thumbs up. This is very similar to the WWE Attitude Era. You can't talk about that era without Stone Cold and The Rock and Stone Cold, just like you can't talk about Hogan without the Macho Man.
And
Let me tell you something, brother. So we got two big stocks in a competing industry. Bert owns one, but the debate is should have he bought the other? Which one of these two do you own? And you might even own both of them, but we would like to know once we get through the analysis here, which is the better stock to buy.
right, Lanny. So what are we going to do? We're going to talk about some just high level metrics, some comparison lines about the company. We're going to run them through our screener, which features three metrics. But because we're talking about REITs, we're going to change it up here slightly. That first metric is the normally price to earnings ratio. It's the price to FFO ratio today. We look at it, compare it to the market, and we'll compare them to each other. Second metric, payout ratio, less than 60%. But because these are REITs, you're going to typically see higher payout ratios. So we're going to see which one's looking better head to head. Third, history of increasing dividends. Self-explanatory, Lanny. That one is pretty self-explanatory. Last bonus metric, the dividend yield. That's what REIT investors care the most about.
You're gosh damn right, Bert. You know what's funny is I don't own either of the two. This is very interesting because the REIT space is obviously taking a lot of heat. High level, when interest rates are high, REITs typically borrow in order to grow, acquire, and build new properties, or in this case, new towers,
Mm-hmm.
as they try to leverage their assets and balance sheet. And then obviously charge whatever they gosh damn well please to big carriers and providers like these two Goliaths.
That's right. We're talking about American Tower, ticker symbol AMT, and Crown Castle, ticker symbol CCI. So let's give some background here about the companies. Here, market cap for each company. American Tower is 83.69 billion. Crown Castle market cap is 42.3 billion. So obviously American, double the size of Crown Castle from that equity market cap standpoint.
Double your pleasure, double your fun with double mint gum.
So they both own towers. So like their companies are about the same, right? I didn't forget about that. Like, that was a nice one in there. I didn't acknowledge it. I apologize. That's very, very smooth. So
Acknowledge me.
yeah, so American Towers have a lot more towers than Crown Castle. AMT has over 220,000 towers compared to CCI, which has 40,000.
Yeah,
Big difference.
how many towers are in your backyard, Bert?
Not one, not two, not three. We have
I
one
have
in
one going through our kitchen.
just popping it up there, those new 5G things that are just sitting on top of the old towers. All right. So some of the other big differences here. AMT has international towers. They're all over the big presence in Europe, India, the Pacific East. That's AMT. And besides the US, Crown Castle, US based only. Now, Lanny, there's another big differentiator here between AMT and CCI, and it talks about the businesses that their focus. What is the big difference that you see?
Great question, Bert. Easy answer. Now, AMT is actually going more into, as everybody understands, computing power, those servers and backups and disaster recovery plans and all those sites, that's held somewhere. Whether it's underground or above ground, that's for another story. But AMT is big into the data centers, for their clients. So clients, essentially rent or lease out space within data centers that is owned and operated by AMT.
Beautiful. And Crown Castle is not really touching that field. And that's becoming more important here too, especially based on the consumer base. Obviously, they're both heavily into telecom. And I don't know if you own AT&T stock or Verizon stock, but the sector's kind of getting beaten down right now. And
Really?
Yeah, I don't know. I might be. If you've lived under a rock, you know that that's not the case.
You mean you're not buying the 8% dividend yielding, high flying, real and dealing Verizon Wireless? Woo!
Yes. So something is going to give in that sector. And what you're seeing is, especially with some of the carriers, they're slowing down their spending, they're slowing it down their investments where they can, which leads to less revenue for your tower companies that are the beneficiaries of the heavy development from AT&T, from Verizon, and from T-Mobile.
Tell you what, when those dividends hit though from the telecoms right now, they're oh so sweet. But yeah, I mean,
Sure.
it's getting a little bit different exposure, diversifying who their tenants are and what services they're providing. Is hey, I would say it's smart on AMT standpoint. But what about guidance and performance? What does that look like, Bert, between the two really quick?
Yeah, because it was interesting. Both companies announced earning beats in Q2, so they both had the same story.
They just
But
beat that earning up, you know.
yeah, they were just dominating. Seriously, they both had great results, but it was where the guidance flipped, which was the bigger story for the two. AMT increased their guidance. They painted a much rosier picture for the rest of 2023. Crown Castle, not so much. They trimmed their FFO guidance. They trimmed some of their other guidance. So they're having a tough part from one of their consumers, which we'll get to in a second in the next section. That resulted in layoffs for the company. They trimmed their workforce by 15%. They reduced their office space. Overall, their guidance was decreased. So while AMT issued the positive outlook, Crown Castle said, we're going to head in the other direction and start tempering down expectations.
Hey, temper that down. You know, trying to improve performance, trying to right size the ship for the future, guys. Just remember that. Yes,
Yeah.
CCI was definitely impacted through the T-Mobile and Sprint acquisitions because, hey, maybe they don't need as many towers.
Yeah, they don't. And when you look at their top three customers, we did a quick Google search. AMT's top are pretty spread out and balanced. 18% for T-Mobile, 17% for AT&T, 11% Verizon. So they're not exposed to one of the telecom companies too much. CCI, on the other hand, with that Sprint and T-Mobile acquisition, 38% of the revenue goes to the newly merged company. AT&T 18%, Verizon 19%. So if their largest customer starts slashing investments and slashing towers, of course your guidance is going to be impacted.
You know, I wonder how many other players are in the tower space here. Is this kind of like a monopoly that we have? I mean, just
Yeah.
just keep that in mind here. You know, is it like the government contracts where you just have, you know, GD, you got L&T, you got what Raytheon, you're just like, okay, who else can we actually go to? Is this what we're in with the towers, the twin towers here?
Yeah, because I mean, if you think about it, it's not that easy for a company to put up a nationwide tower network overnight. So that is what AMT and CCI
Plug it in
benefit.
your house.
Yeah, you're right. Soon, I mean, I'm shocked there aren't more that aren't like build your own tower. Like, like
Yeah,
go buy
they
the
put it in
equipment
a
and stick
box.
that thing on there. Yeah, you pay for it all and we'll give you the service. Like, I'm shocked there hasn't been more of that. I guess that's kind of what Starlink is. That's I guess their biggest competitor is running into the Starlink network, which could upend AT&T and Verizon the way we do it, and of course it's going to impact towers. But yeah, maybe that's where it comes from. We'll see if Starlink works out.
Interesting. That's very interesting. All right. Well, let's
Yeah.
let's get into it though. Let's get into the metrics, guys. We're recording this. Gosh, what is it? September 19th, a Tuesday. There's that Miller Lite. Props out to Molson Coors Brewing Company. Bert's just sipping on the Miller. Yeah, it looks like Andrew Miller. It is Miller time over here.
Oh, that was one of the best baseball seasons I've ever been a part of when Andrew Miller near just dominated. 2016 Cleveland Indians, not Guardians, Indians. Keep that in mind. Look it up. Andrew Miller was a monster.
The
So
heartbreak.
yes. All right. So let's run them through this here. We're just going to do both companies side by side. We're going to go through them pretty quickly and just get to the final answers here for the numbers. Let's start with that price to FFO ratio. AMT's price was 177.36, FFO 974. Price to FFO ratio is 18.21. Compare that to Crown Castle. Price was 96.97, FFO $7.48. Price to FFO 12.96. So
Wow.
yeah,
Wow. Interesting.
Lane, you want to run us through the payout ratio for each company?
Let's do it, guys. So AMT, so $6.28 for AMT on an annual basis there. That leads to a nice, healthy dividend payout ratio based on that funds from operations figure of 64.48%. So that just triggers in your mind that, oh, dividend growth should be pretty strong here. CCI, Crown Castle, on the other hand, pays a very similar size dividend, but Bert indicated the FFO was smaller. So $6.26 in dividends over that 748, you're looking at an 83.69%. Not one to be alarmed at because of how much you distribute out from earnings, but growth should be a little bit lower than AMT's from CCI. So, Bert, that is a segue back to you.
Perfect. Let's talk dividend growth. AMT's 5-year dividend growth rate is 16.42%. They've increased that dividend for 10 years. CCI, on the other hand, 8.31% 5-year dividend growth rate with an 8+ year dividend increase streak. So similar amount of time they've been increasing that dividend, but AMT's dividend growth rate is significantly higher. And there's a reason why they can do that, because they're leaving plenty of room in their earnings to keep growing that dividend too. That's, I think, the big difference here. You can't grow your earnings as much when your payout ratio is 84%. I mean, grow your dividend as much, I should say.
Right. Unless, like you said, you just keep smacking the ball out of the park.
That's true.
By 15-20% net income growth, and you just like a higher ratio.
Yeah. But when you cut your guidance, that's not the case. That can't really happen when you're going around cutting your guidance. But please proceed.
But yeah, both stocks, I mean, I like it. 10 years for AMT, like you said, 8 years plus for CCI. It's great. Now, how does that translate to dividend yields? Because you're a passive income investor. You're a dividend income investor. You're a dividend growth investor here. So you're curious last, but not as critical as the others. But what is that yield? How much are you getting paid? AMT slides in with an above average yield to the S&P 500, but usually it's kind of on the lower end of the REIT space at 3.54%. And then CCI kind of just pushes aside and says we're at 6.46% from a dividend yield standpoint.
That pretty much tells the story. I mean, I don't think there's really much to elaborate on there. CCI's the higher yielding of the two, and that's what a lot of people gravitate towards when they see the company. Performance year to date, AMT is down 17%, down 25% over the last year. CCI, on the other hand, is really getting Logan leg dropped, and they're even getting a nice little frog splash, or what's the Macho Man elbow drop off the top rope too on top of it, because they are down 30% year to date and 40% over the 1 year. So their performance has been abysmal.
Wow. 30 and 40%, but yet increasing the dividend handsomely, if I may add. And they're on the cusp of another dividend increase come next month in October. So really keep that in mind as we head into October when we are evaluating, and you're evaluating if you want to buy CCI stock. That should happen within the next 4 weeks. So just keep that in mind.
Good point.
Bert, you trickled in here a little bit of debt levels here. So the debt to equity is high as heck. Somehow for AMT at 7.5x, and then it's 3 times for CCI. So it's a lot of debt to equity on AMT's balance sheet. Oof.
Yeah, that one caught me by surprise. It's a pretty levered company, which it's fascinating. But debt matters. REITs are always going to have debt, but you look to combat that, the lower payout ratio for AMT, that could be why they don't pay out an 80% of it, like a higher dividend at 80%. You'd become much more concerned with that level of debt if they had CCI's 84% payout ratio versus the 64% where they are right now.
Well, guys, we're going to put the stats up on the screen. Both are great, plays. I know the space is very interesting. Telecommunications isn't going anywhere. I mean, heck, I know I'm recording this, on my phone right now. So I know, there's many uses of that device. So the towers are still going to be used, but maybe it might be a different way in the future. Who knows? But what's your takes here since you own AMT?
Well, I've obviously been buying AMT over CCI over the last year. And the reason why I've gravitated, I've given up some of the yield. I've been willing to sacrifice the yield for the higher dividend growth and the safety of dividend. And that's been one of the lessons I've learned over the years. And that's become even more important in 2023 is you're seeing the results of some of those higher yield, lower PE ratio investments in the past coming due in the sense of you're seeing them struggle. You're seeing potential dividend cuts where I'm trying to take some of the lessons from previous investments and apply them here. And to me, that's why I'm flocking towards a safer dividend with a higher growth rate in AMT versus CCI.
Yeah, I mean, with the growth rate that's in the double digits, I mean, that yield is just going to blossom pretty nicely, if I can say so myself. Within, if they keep a 16% growth rate at 3.5%, pretty much within 10, 11 years, you're going to be yielding over 13, 14%, Bert.
Yeah.
Whereas CCI, obviously, with that nice 6.46% yield, let's do a quick little math here,
Yeah.
based on their historical 5 year, essentially, it might be a while until
There will be
they
a break
they
even.
catch up, but um, and you guys could always do that on your own. You could see how many years of compounding at the dividend growth rate will that yield start to really like outpace one versus the other. And just doing a quick side by side, by year 10, Bert's going to be pretty happy if everything remains equal because his yield on his cost with just dividend growth alone will be outpacing CCI's if that 16.5% growth rate. That's that long-term mindset that we always talk about here on the channel. Obviously, your investing horizon might be different. You might be retiring within the next few years, and you need that punch of income. So, hey, CCI is probably your bet. If you've got 10 years plus ahead of you and you're okay with a decent yield, not swinging for the fences, AMT is probably a great bet because you'll be very happy in 10 years.
A great point. Great calculation to put up there. So, everyone, let us know what you think here. AMT versus CCI. What are your thoughts here? Where are you investing in the sector? And if I know that there are the CCI investors out there because they comment a lot on the videos, especially when we talk about AMT, let us know why you're picking CCI over AMT. I'm very curious what your results are.
And guys, if you haven't, please subscribe to the channel. Definitely like this video if you gain some benefit from it. Keep saving, keep investing. Bert, hit him with the sweet chin music here.
You're not with us, you're against us. Jack, get out.
That was Bert and Lanny from the DD over and out.